Hey there. So this is a trade we did in RSOL last month. This is one of my favorite patterns. This is what we call a base breakout pattern. So, oftentimes stocks will come and really be a high flyer here. And as with all things, once you get up too high, stocks will inevitably come crashing down. And when that happens, it takes a period of sometimes weeks to months to really heal yourself, to kind of heal the wounds of, right, that big crash. And so, the buyers and sellers finally have to reach some type of equilibrium where the selling starts to subside. And as that happens, what you'll start to see is really a flattening out of the stocks, and you'll start to see the moving averages flatten out, and that'll be kind of a telltale sign that this stock has healed. And so these type of stocks on the bottom here, what they'll do is they'll start to form a range where you have kind of a clearly identifiable area that is holding it down. And so when you can thrust above it, that's when you can get really some monster moves. And so we caught a huge rip in this stock. We added this stock right at 295 the day it broke out, and we ended up selling out most of our shares in the 410 to 417 range. And let me show you how I did it. And it was based off this pattern. One of the things that we look for is pattern. Obviously, it had sector momentum. The whole solar sector was going. It had volume come into the stock, that really gave it the power it needed to go. And so, how we timed our entry on this bad boy was, you can see, right, that that $3 mark on the daily chart is really, really the area that, was holding it down. And so, essentially, we have a lid on the stock kind of, if you go back even a little bit of ways, there's kind of a lid that's happening on the stock. And we could tell the stock was strong because it opened up real strong in the morning. It started taking out the highs kind of from the previous day. And you could see here, right, there's very little volume. And it started to push in rather quickly. And so I had this thing on watch. And so this thing thrusted up to $3, which is the resistance level. Right, which is the resistance level on the daily. So you can't really buy into that because see how spiky it is, right? You can't buy a 30-cent spike on a $3 stock. That's 10%, especially if it's going to run right into resistance. And so if you're going to buy a stock below resistance level, it's got to be real coiled up and tight so that you can add it and it'll have the power to break above the resistance level. So you've got to buy it in more of a consolidation. So this stock pops up and comes back down here, and essentially, right, you get a mini flag pattern on your 5-minute chart. And so as it's in this flag pattern and breaks, that's where we add the stock. And so I add 5,000 shares of this stock right at 294, for the breakout. And so as is my custom, I like to scale out of my stocks. And so as we're spiking up on this thing, I'm essentially selling this thing off, 1,000 shares at a time, all the way up to 330, and then I keep 1,500, 1,600 shares. Well, the exact number was 1,600, and so the stock flags again. I could have actually added it here, but I just had missed a pattern. I was still holding a nice number from my original position, and I was content letting it ride. And so stock spiked up again here, back up above it, and so into this spike now. You got to sell off a few more because the stock is getting really, really extended. And now, you've got your last bit of it. And so, I'm always looking because this type of momentum stock, typically what happens, you'll run into lunch. And then obviously after that time, lunchtime, things tend to slow down. So that can be a period of consolidation. And so the stock starts to come back down, down to this area. And so you can see what's happening here is, right, it starts to just coil up here, towards the lows. I was telling the guys in the chat room, we added here at 360. And then I added some more when it broke here at 360 again. So, we kind of tripled up on what we had. And when this level started to hold at 350 and we curled out of it, I knew that this thing was going to go on an end-of-day run. And so, we tripled up in this particular area. And boom, right, we start scaling out along the ways here, all the way up to 410. I'll keep a core position, of course. And the stock comes back to support, bounces, come back to support, bounce. And so, right, we're essentially flagging again. And so I actually add another batch of this stock just for one quick last spike into this. Still holding my core position and still holding a few from 290. And, I sell the rest into this ripper, end of day. And that's how you make the money, right? And so one of the things about trading is that you never want to average down on stocks. unless it's planned. So don't double down because it's a loser. You can average down if it's a planned thing. But one thing you can definitely do is average up. Average up on a stock as you're starting to develop secondary patterns off the main pattern that you're seeing on the daily chart. If you deem it to be a very powerful setup and then the stock starts to prove itself, you can add more money to it and develop it into a big winner. I would have made some decent money if I just kind of held my original position, right, scaled out. But the reason I made a lot of money on this trade, over $3,000, was that I was adding along the way, along with keeping parts of my core position, and that really helped me, magnify my gains into the close. So I hope you like this trade. As you know, I've got hundreds of these type of videos on the blog, so you guys can check them out anytime. Take care.